It's Brian Preston, the money guy.
This next question is wasabi is spicy, and I think this is a question a lot of people have right now. Why are you laughing at that?
Well,
it's a funny name.
I cleaned out my nasal passages just reading the name.
Just
you reading the name
yep.
out loud to me.
Wasabi said, we sold several assets for cash, and now we have too much money in checking accounts. I don't know why they did that, but we have too much money. Where should we put the money to keep it liquid in case of emergencies, but still make the money work for us? I think what Wasabi is saying is, hey, I've got cash, I've got an emergency fund. How should I think about holding that? Where's the best place to hold cash? Is there some magic bullet that's going to make me really excited and start watching that army of dollar bills start cranking?
Yeah, cash holdings, these are things that you think you will need the money in a short time period. 12 months, is like super, you'd better have that easy access at any point in time. Less than 5 years, you don't need to have that in volatile investment marketplace items. Even as simple as something as bonds is somewhat scary in less than 5 years. So this is not going to be sexy, but it's just the reality. Online savings accounts fit the need for that. The reason we didn't say your local brick and mortar is because typically they're not paying you interest. They're paying, if they are, they're paying you, Bo, you just checked on our local brick and mortar here, and it was 0.03%.
0.03%, which is pretty disheartening.
At least if you go look at the ally.com and some of the others that are the leaders in the online marketplace, they're around 0.5% right now. Now, look, a year and a half, 2 years ago, they got up to 2.5%. And then you actually felt like your cash was doing something. But right now, you have to settle in that about 0.5% is about as good as you're going to get on online savings. One word I want you to do an experience share, Bo. Why do you want to choose, and you can go to bankrate.com to go pull the rates, but why do you want to choose a good brand to affiliate with versus just the highest rate?
Yeah, this happened to me a number of years ago. You guys may not know this. Brian and I stay in pretty steep competition with one another all the time about all things. And he had told me, this was a decade or so ago, that he had a really great high-yielding account that was paying X percent. And I was like, okay, great, I'm going to go one-up him. So I went to bankrate.com and I searched, and I found the highest yielding account, and it was, 0.25%, 0.5% higher than what yours was paying. So I immediately opened an account there, and I moved all of my emergency fund in there. And then I tried to lord that over him every day that I came to the office, how much more my cash was earning. Well, I was probably not in that account for 30 days, 60 days. And then I got a letter in the mail saying, hey, just want to let you know we're adjusting your rate. And they adjusted it down. And then, 6 and 90 days later, it got adjusted down again, and then down again, and then down again. And before long, I want to say that your high yield was at least 100 basis points higher than mine at the time. And what they had done is they had bait and switched me. They had got me in this teaser rate where I came in and I moved all my money over, which is a pretty arduous process anyway. You got to open new accounts and you got to transfer it. And so it becomes pretty sticky. And then they just kept dropping my rate and dropping my rate. And before long, I was no better in the high yield I moved to than the savings account that I had moved away from.
That's exactly
and it was because it was not a reputable company. It was kind of a brand new. It was still fully FDIC insured and all the boxes were checked, but it wasn't one that is perennially in the top tier of high yield payers. And I learned my lesson. I learned my lesson not to chase that. And here's what I think, emergency reserves, cash is there for a very specific reason. And that reason often is not to grow and earn interest. Now, it's great if you can, but right now, interest rates are just kind of in the doldrums. You said it, Brian. As recently as 2 years ago, you could get like 2.5% on your cash, which sounds amazing right now. And those times will come back. Don't let yourself suffer from recency bias. And just because rates are low, you start thinking, oh, well, I don't need to hold cash or I need to do something else with it. That cash is not supposed to be the growth part of your portfolio. Your equities, your invested assets, your long-term assets are supposed to be the growth part. Let your cash do what your cash does. And if the best the market will give you right now is 0.5% or 0.6%, that's okay.
Yeah, and I think it keeps you. I want to give you the experience share that I can't remember, it's somewhere probably around 2010, but somewhere between 2008, 2011, I shared with you guys the collapse of home equity lines. And that used to be the way I would tell everybody I had plenty of cash. I had access to six figures of cash because I had all this home equity. Well, I learned when in the market downturn of 2008, 9, 10, 11 for real estate, that home equity lines are, even, it doesn't matter if they give you a debit card, it doesn't matter if they give you a checkbook. They can write you a letter any point in time saying, nope, just kidding, you don't have access to that anymore because we don't think you really do have that equity. We've reevaluated the value of your real estate, and it can go away. And you never want to get caught that naked where you're not able to have liquidity for the emergencies. And I want to go the other side of cash, because I know cash, especially when interest rates are so low, everybody like hates it. They tell cash is trash. But I do think once you make it through all 9 steps of the financial order of operations, there's actually some value to having a healthy cash reserves from market opportunities, meaning that when it can be your powder money for not only for cash reserves, but it also can be when everybody else is panicking, you will have tremendous supply of something that is a very valuable resource at that point, because cash is oxygen in a market downturn. And everybody thinks they take oxygen for granted until all of a sudden you're underwater. And then you realize, oh my goodness, I need oxygen to breathe. That's what cash does for you. If you can have enough of it, you have your surplus tank. And then everybody, ask Warren Buffett, everybody needs oxygen when markets are down, and that's what cash is going to be, that infusion. So don't let it be something that depresses you, that you're not making any money, because not only is it going to keep you safe, but it also might create a tremendous opportunity for you if you do this right.
Love it.